let's get into the fixed income space. Oladimeji Obasa, the fixed income dealer at Access Bank, joins me now for the market update today. Thank you so much for your time, Oladimeji. It's midweek now, and let me get your take on what we're seeing play out in the market so far.
Good morning. Thank you for having me. So far in the market, we've seen bullish sentiment following the conclusion of the DMO's bond auction on Monday. We've seen a lot of unmet demand from that auction filter into the secondary market. Closing last week, we were just above the 18% handle, but after the auction, we've been below the 18%. What we should note is that the 2032 has been the most actively traded after the auction, and we've seen that bond trade just around 17.7%, about 30 basis points below the stop rate of 18% from the auction. Also to note is the CBN is floating an OMO auction today, which is the second one of the week. Yesterday we had another OMO auction where the rate closed with a yield of about 28%. Now there's another OMO auction today, and we expect that the yield to be slightly lower than yesterday's auction.
Interesting, we're seeing all of this come back to back, but what does this say about investor positioning and also liquidity in the market?
So liquidity is currently high in the market, which is the reason why the CBN also came into the market today, even though they did an OMO auction yesterday, essentially just to mop up that excess liquidity. For investor positioning, we are seeing a lot more interest come into the market, particularly on the longer end of the curve. A lot of the bearish sentiments that we had noted going into the bond auction on Monday and closing last week has seemed to be relaxed now, as we're seeing more buyers coming into the market, particularly on the mid to longer end of the curve. So from the 2032s all the way to the 2053s, we are seeing renewed interest.
On the April OMO, I'm trying to imagine what's driving demand for that, and also how sustainable are the current levels that we're seeing, given the current sentiment in the market?
So currently, the liquidity is high in the system, which is why there's a lot more interest, particularly for OMOs amongst banks and FPIs. On the FPI side, in particular, we're not seeing as much interest in this particular OMO, just because the tenor is a lot shorter than what they would prefer. But amongst banks, it's still very attractive. The rates are at about 24.9% discount, 24.5% discount rate is very good. Like I said, the yield is just above 28%, which is attractive for a 90-day paper for banks. So we're seeing that we're seeing a lot of interest from banks on these papers, and we expect that today's OMO auction will close just below the auction that was conducted yesterday.
All right, let's get to the secondary market side, because we're seeing that there's some unmet demand in that space from the bond auction that has come into the market there. What would you say the strongest pressure is on the curve?
The strongest pressure, I would say, has been on the 2032 papers. A lot of market participants had built up some short positions going into that auction, and some were not able to fill their demand at the auction as the rates closed below the general market consensus. Market's expectation was for rates to close above 18%, but the DMO put the stop rate at 18%. So we've seen that a lot of that unmet demand has come into the secondary markets. Although the momentum has not been very high, we've still seen that there are a lot more buyers now compared to last week before the auction.
Yeah, because I'm looking at stop rates now. I'm seeing it's about 26.9%, 26.4% here. Are we nearing that ceiling for yields? And do you think that we can expect further upward repricing?
What we'll say is that we can expect an increase in yields, particularly on the longer end. But on the shorter end of the curve, I think the dynamics is more for either stability or for yields to come lower. As I've said, the CBN is focused more on issuing shorter tenured OMOs, which has put a bit more pressure on the longer dated OMOs and NTBs. And that's why we've seen their yields come down. On the bond side, there seems to be a bit more room for us to go a bit higher, but I'll put the ceiling at around 18.5% for the bonds.
But quickly before we wrap up the conversation, just want to get your outlook on the Naira and, you know, looking at how the market is pricing expectations for a further CBN intervention.
So currently we're trading at about 15.37 on the Naira. There's a lot of two-way trading there, so demand and supply is quite active. We continue to see steady and consistent interventions by the CBN to keep these rates stable. We do not expect any unforeseen moves. We think that the rates will continue to stay stable just around that 15.35 to 15.40 levels for now.
All right, interesting times for the market here, but thank you so much for your time on the show today. Oladimeji Obasa there, the fixed income dealer at Access Bank.